Hi guys, welcome to Investing with JYK, and today we'll discuss quickly about Qudian. It's a Chinese, um, they call it like a small credit company. Basically, they give out small loans, except they started giving out auto loans. Um, so looking at their data, they went public not long ago, like in 2017. Price has gone down a bunch, but it is still trading at more than 2x book, and I don't know how much money they earn, but the earning is not really trustworthy too much because much of that is based on assumptions um, of delinquencies, and then they used to have tiny delinquencies of 0 point something, and charging people more than 10% in interest. So that spread is just way too large. I don't see how this can sustain in a normal marketplace. But you can argue that China is not really a normal marketplace where the parents will foot the bill for the stupid students that actually borrow money to buy their phone. Anyways, so let's look at, well, their income went down a bit. Let's look at this. Number of transactions went up until Q3 of 2017 and then went down. This is just a number of transactions. So that if the wait a sec. Billion, huh? Sorry, this is not even the number. This is actually that is actually the new, essentially the new what you call those transactions, like the amount of money they lent over that period of time. And here's the breakdown of revenue. You can see this thing suddenly started appearing. They call it sales type lease. Whatever, it's just auto loans. In fact, it's budget auto loans, which they talk about in their annual report, somewhere in here. Budget auto loan, budget. I think so. Budget auto financing, yeah. Essentially cheap cars. So they lend money to people that don't have much money, and then they sell them cheap cars. So one thing you need to understand is for an auto loan, you no longer can charge them this crazy interest rate. I did not find the number, but if you just think about it, if you have a pure credit loan and then auto loan which has a collateral, obviously the one with collateral is going to be lower. And given the fact that they're currently accounting for only 1 to 2% delinquency rate on their credit loan, auto loans delinquency rate was going to be what? 0 at, in the best scenario. So the interest margin is going to come down a lot. On their accounting is going to look a lot worse. Their capital efficiency, as reflected through their accounting, is going to be a lot worse. Whether it's going to be a more profitable business, we don't know. But there's already been a bunch of people buy cars on credit fairly often. So I think that market is going to be more competitive. Anyway, then they have some R&D and all that crap. In terms of their delinquency, you can see this is quite bad. The delinquent principal is skyrocketing. In fact, it doubled since December of last year. So this is Q1. So this company's accounting is clearly not robust, right? So their coverage ratio has gone from 1.6 to 1. Essentially, they have 800 million, I think, or yeah, 800 million renminbi in reserves to 800 million that's already known to be delinquent. As I suggested, it is impossible. Yeah, you can see how the delinquency shot up, right? For what is this, Q3? The people just don't pay since they went public. I would say like 2 quarters after they went public, they started lending people to almost anyone. Yeah, so this is a ticking credit bomb. We don't really know if they will actually be, if they keep doing this, this is an even sharper rise. But if they keep doing whatever they're doing, they're going to end up like, I don't know, not a perfect comparison, but like Geico in 1976 or something. Because for these financial companies, if you don't control the risk well when you lend the money, yeah, the problem won't show up immediately. It's been like 2008 or 2006, 2008, except this is even faster. The risk doesn't show up immediately, and then your earnings report looks fantastic for, in those cases, a couple of years. In this case, a couple of quarters, and then it's gonna become crap. So yeah, the numbers are not too meaningful except delinquency and then the source of revenue. So their source of revenue is declining rapidly on the consumer loan, and then it's increasing for on the auto side. And on the auto side, the weird thing is they're building showrooms. Like, you're a financing company. Why are you building showrooms? Look at this. Whatever. It says merchandise credit product has average size of weighted term of 9 months. To companies, we offer budget auto finance through our nationwide network of showrooms. That is just going to draw down your capital efficiency even further, because now you have to build those and man those. It's quite stupid. I don't quite understand why. I can understand a dealership company who ends up with more cash than they really need go into auto loan thing, but even then it's still kind of dangerous because you're very exposed to a single region, because most dealerships are probably going to be regional. But anyways, what else did they say? Let's look at the star by auto. Alright, so this is the star by auto has they leased out 6,600 cars. But really isn't these. It's just in US you would call it just auto financing. It's not really a lease. I don't know why they call it lease, but yeah. And they try to be cool. Say, oh, we use facial recognition technology to verify each applicant's identity. Holy shit, you have their ID. You have their license, driver's license and ID in China, two different things. You have both of things, and then you have their face. You get a guy to look at their face. You don't. What? This is clearly trying to drive up some hype. So, oh, we are so tech. We're fintech. Ooh. Anyways, yeah. So I'm very bearish on this company. I don't know if it's a good short, but it's definitely not a good buy. At the moment, its PB is 2, which is on par of CACC, I think. This is an auto loan company. They basically lend subprime, and they have some crazy delinquency rate, but they charge very high interest. So, and they repossess the cars a lot and resell these cars. Oh my god, 4 shit. Anyway, they have like a 30% delinquency rate in the first repossession rate in the first year or something. Insanity. But yeah, this company, I don't know. I think the earning will keep declining for a bit at least. The most worrying thing is this might keep blowing out. If this keeps blowing out, that will very soon start eroding into their book. So yeah, that's it from me for QD. And if you're interested, go to the website. They do have English reports and presentations. See you next time.